Sure. Yeah, so the equity returns are coming down, and I think that's characteristic of the number of investors who are coming into the market and the competition within the market. I think when you look at it in terms of the actual risk profile of the projects, I think the investors who are coming in and the lenders are very experienced infrastructure investors. They know what they're doing, they know how to assess and price risk. So I think from that perspective, the returns that we're seeing are really representative of the risk profile of the projects themselves. So I think the early days of inflated returns where there was some uncertainty over the risk and obviously higher uncertainty needing to be priced into the investment returns, those days seem to be coming to an end now. I think the construction and operation of offshore wind is now well understood and well understood enough that the investors can really price the risk profile and price their investment to quite a refined level. Sure. So I guess distinct from the UK, Germany and the Netherlands, the developers are not necessarily taking on the full development risk of the project, so they're almost allocated a concession which includes permits and licenses and a grid connection agreement to actually build the project. And also the grid connection itself is often provided by the network operator. So distinct from the UK where all of that work has to be done post-bid award or pre or post-bid award by the developer. So from that perspective, the development costs and the construction costs of the transmission system inflate the price slightly. But in both instances where we're seeing the significant price reductions, it's really being driven by the scale of the project. So the scale of the turbines have increased from sort of 2 to 3 megawatts, maybe 10 years ago. Now we're looking at 9, 10, 12 megawatt turbines. And so those increases in scale are really driving economies of scale in the supply chain and allowing the per turbine cost to come down really drastically. It's also worth saying that the supply chain is really engaged in the development of the projects as well. So in the old days, when we had really high levels of subsidy, high strike prices, the supply chain knew what the projects were getting, and so they knew how to price the supply to make the project successful, but also make sure they were getting a fair slice of the high support levels. Now we're coming into a regime of much lower support levels. The turbine suppliers and the foundation suppliers and all of the suppliers in the supply chain understand that landscape, and so they have reduced their returns commensurately with the reduction in the support levels, and so the whole ecosystem manages to continue working along. Yeah, so auction processes have been quite successful in driving down costs. Obviously, we're setting, they require developers to compete for a limited number of projects that allow a reduction in the overall supply price. And obviously, as I've said, that kind of runs out into the wider supply chain and the costs in the wider supply chain. Auction processes are also limiting the development speed. So they're limiting the amount of capacity that can actually be built out in any one period. And what that does is it's phasing the project. So while a country may have a very long pipeline, it's limiting the speed at which that pipeline can be built out by only allocating certain amounts of capacity at each stage. Now, there's pros and cons to that. Some would argue that the market should decide how much capacity should be on the network, and let that come down to market forces and the demand from consumers. But I think from a regulatory perspective, and making sure that all of the surrounding developments, such as investment in grid infrastructure, investment in smart consumption, all those things can take place at a reasonable pace alongside the build out of the actual generating capacity. I think that's how it's managing to kind of slow down the development a bit, make sure that the pipeline remains strong, and allow that to progress. I think in the UK, what we're seeing is that the Crown Estate beginning to catch up to ensure that new leasing rounds are coming on, so that new zones are allocated in good time for the future expected CFD rounds, so that pipeline of projects can continue to develop. So I think we're now seeing projects up to kind of 2030, and then the next round, the round 4 of new allocations from Crown Estate, should then bring on a pipeline for at least another 10 to 15 years, I expect.